Next is distributions. So how the distributions will be taxable and whether it will be considered as a dividend distribution or as a non-dividend distribution. So for that, we'll bifurcate the whole amount of distribution in three parts. First is dividend, next is non-dividend, and the third is gain. Whatever will be the remaining will be considered basically as a gain. So what do you mean by dividend? Right now only we have saw that what is accumulated ENP, right? Up to that amount, up to the amount of your earnings and profit, whatever is being distributed will be considered as a dividend distribution. Okay. And over and above that accumulated ENP, up to the amount of your basis, in Jason's example we saw, right? Up to the amount of his basis, this will considered as a non-dividend. Over and above the ENP, but up to the amount of the basis will be considered as a non-dividend, right? Whatever is the remaining, your ENP has been used, up to the basis has been used, over and above the basis, if you're getting the distribution, then that will be called as a gain and will be taxable in the hands of the taxpayer. Over here, see, remaining 4,000 was considered as a capital gain for Jason. Remember, just refer this example based on this. Okay, up to the amount of ENP, you'll consider it as a dividend distribution. More than the ENP, up to the basis, it will be a non-dividend distribution. And up to the amount of the whatever is over and above this, it will be considered as a gain. Now, what if in distribution you receive a property? If the corporation, if the shareholder is getting the property from the corporation and that is in the form of dividend, what you will do, you will have to recognize gain. But how much the gain will be recognized? For that, you have to compare the FMV of the property with your adjusted basis. If your adjusted basis is less as compared to the FMV, then only you recognize the gain. Okay, up to the adjusted basis, it's not a gain, right? It's a non-dividend distribution, I can say. Over and above your basis, it will be a gain. So how you're going to calculate? Take the FMV. Here the definition of FMV is different. What you will take FMV, whatever is the higher of actual FMV, right? If there is the actual FMV will be given, and along with that property, if you're assuming the liability, if you're assuming the liability along with that property, you will compare that liability amount with the actual FMV. Whichever is higher, that amount you're going to consider for the comparison in case of this formula, right? That FMV you will consider, you will compare it with the adjusted basis. Got it? Now, what you will do, if the property is depreciable, right, then in that case, up to the amount of depreciation, or I can say recapture, unrecaptured amount will be called as ordinary income. See, let's say, for example, my adjusted basis is 50,000. The FMV of the property is say 1 lakh. And the mortgage, which I am assuming on this property is say 1,20,000. So what I'll take, whichever is higher of this, it's 1,20,000. I'll compare it with my adjusted basis, that is 50,000, right? So obviously my FMV is more than the adjusted basis, so there will be gain. Yes, how much it will be? 1,20,000 minus, see, 1,20,000 up to the amount of my basis, that is up to 50,000, it will not be taken into account. Over and above this 50,000, right, like say 70,000, I will tax this amount. But out of this, there will be ordinary income. It will be taxed as ordinary, and some part will be taxed as a capital gain. How much will be ordinary income? Whatever depreciation I have taken on this now, right, on this property, that will be recaptured, I can say, as an ordinary income. And over and above that, I will take as a capital gain. That's it. You got the meaning of corporate, like you know how to distribute and take the taxable income in case of the distribution by way of property. Now what the shareholder will do, shareholder will recognize income, that is FMV of the property, as a dividend income. See, this was from the point of view of corporation. Corporation is giving up the asset, then for corporation, what will be taxable? That calculation will be done in this manner. You will compare the FMV and with the actual liability, and then you will see the adjusted basis of that particular portion. Okay. Next is shareholder, from the point of view of shareholder will directly recognize FMV of the property as a dividend income. FMV of the property will be directly considered as a dividend income. Got it, guys? Just one more change I want to tell you, that here the adjusted basis means the adjusted basis of property. Just remember this thing. I forgot to inform you this. Let me tell this thing again. If the corporation is giving you some property to giving the property to the shareholder, then for corporation it should be taxable, right? They are giving up the property. I can say it's a sales of property. In other words, then what you will do, you will compare the FMV with the adjusted basis of property. Adjusted basis of property. If your FMV is more than the adjusted basis of property, then it will be taxable. How much will be taxable? Whatever is the difference. And over and above that adjusted basis, right, it will be taxable, but it will again be divided into two. Up to the depreciation amount, it will be recaptured ordinary gain, and whatever is the remaining will be the capital gain. All right. And for shareholder, it's straightforward. Whatever is the FMV, it will be taxable as a dividend income, considered as a dividend income. Next topic is distribution of stock or stock rights. From this, I think there will be one or two theoretical questions. Stock dividend, I can say, it will be tax-free if provided in the form of common stock. If you are getting a common stock, it will be directly a tax-free, right? If it falls under this condition, then treat the distribution as other property distribution. We'll treat that stock dividend as we are getting any other property as a distribution. Okay. If the shareholder has the choice to receive cash or other property, right? If the shareholder is given a choice, if the shareholder is given a cash or other property, to some shareholder they are giving option to have a cash, some shareholder they are giving the property, or an increase in the corporation's assets or ENP to others. Okay. That is not a standard treatment. Some people are getting cash, some people are getting any other property, some people are just getting increase in the corporation's asset, right? Then third condition is convertible preferred stock instead of common stock, if they are getting convertible preferred stock. Fourth they are just getting the preferred stock. Fifth, they are getting preferred plus common both. Yeah, or else they have the option to select. So if any of the scenario is there, then the whole amount will not be a tax free, but it will be considered as any other property has been distributed to the corporation. Got it, guys? This is about distribution of stock and stock rights. Next is deemed distribution. If the corporation is providing the below the market loan, below the market interest, or has not charged the interest to the taxpayer, then that kind of loan which is given will be called as a deemed distribution. If the shareholder is already having some debt, right, that debt has been cancelled by the corporation, then that cancelled debt is called as a deemed distribution. If there is a transfer of property to the shareholder for less than fair market value, the taxpayer is the distribution provided, like the property given by the corporation to the taxpayer, and the taxpayer is giving the amount which is less than the fair market value, right? So that will be called as a deemed distribution or deemed dividend, I guess. Next is unreasonable rents paid to the shareholder or unreasonable salaries paid to the shareholder, right? If the market rate is say for 1 lakh and you are paying salary to the shareholder for more than that, then that is an unreasonable distribution, right? So that will be called as a deemed distribution. For this, you will receive 1099 DIV, right? And 1099 DIV in 1096 will be filed to IRS on 28th of Feb and 31st of March if you are paying through EFTPS. And if case of patronage dividend, if it's more than $10, you will file 1099 PTR. Okay. The company will provide this 1099 DIV or 1096, right, to the shareholders by 31st of March. If the dividend is paid or other distribution is above $10, and if there is any withholding of, and not, I can say, or if there is any withholding of taxes, and if the amount paid is more than $600 as a part of liquidation. Got it, guys? So this was about the distribution of stock or stock rights, deemed distribution we saw. Then we are coming up on the redemption of stock. If the stock has been redeemed, then treat it as a distribution. Okay, acquisition of corporate stock from the shareholder in exchange of money or property. See, money and property is given, and against which the corporation is taking back that stock, right? That's a redemption of the stock. So we'll treat that type of treatment, that transaction, redemption, as a distribution. So treat the distribution of stock as a sale or trade if any of the following are true. If redemption is not a dividend, if it's a partial liquidation, or if it's a complete redemption of the stock. So what we'll do, we'll treat that redemption as a sales or trade. As a sales or trade, we will consider it, right? If that redemption is not against the dividend, if that is a partial liquidation, and if it's a complete redemption of all stock. In case of partial liquidation, we'll have to see this condition. See, after redemption, if the shareholder is owning less than 50% of voting power, plus the ratio of ownership is before redemption for, say, it's a particular percentage, right? Now, just after the redemption, the ownership percentage is reducing than 80%. Right? You remember in case of contribution, we saw that if it's you're owning more than 80%, then it's not taxable transaction. But in case of partial liquidation, you will see these two conditions, right? If after redemption, the shareholder is whether owning less than 50% of the voting powers, plus the ratio of the ownership after redemption is reduced to 80%. Okay. Then there's a liquidating distribution. See, just below that, there's a liquidating distribution. If liquidation of corporation is happening, then not taxed up to the basis. We have already saw that, right? Up to the basis, whatever is amount distributed, it will not be taxable. Over and above that will be a capital gain. But if you receive a distribution which is less than your adjusted basis, then up to your, like, whatever you are receiving, less your adjusted basis, whatever is the amount, you will consider it as a capital loss. Only in case of liquidating your distribution, you are liquidating the whole amount from the corporation, then the over and above your distribution will record it as a capital gain. If you receive a less distribution, you will record a capital loss. Okay, let's see one example. If you receive a real estate which is having a fair market value of 1 lakh, corporation's basis in this asset is 60,000, right? So for corporation, the profit is 40K, I can say, and shareholder is having a basis of just 5,000. What the corporation will do, corporation will recognize the gain, right? So this is how they will increase the ENP. Since the gain has been recognized, for example, the basis is 5,000 for the shareholder. Current year ENP is 10,000. And we have distributed 1 lakh. So out of this 1 lakh, how we will bifurcate? But before bifurcating this, in this $10,000, we will add the profit which we have gained on the real estate which we are transferring. Okay, so the gain is 40,000. So we'll add this 40,000 in the 10,000 ENP. That comes to 50K. We will add the accumulated ENP if any. So here it's not mentioned, but let's take an example. The accumulated ENP was 20,000. So our total ENP is now 70,000. So out of this 1 lakh, up to the ENP amount, I'll call it as a dividend. Over and above this dividend, over and above this ENP, remaining is 30,000. Out of this 30,000, up to the basis, right? Up to the basis, it's non-taxable. Over and above the basis, that is 25,000, will be my capital gain. Understood, guys? This type of questions will come in exam, and you'll have to read it carefully, whether they are asking about the dividend amount, they are asking about the capital gains amount, or whether they are asking the profit to be recognized, or whether they are asking the total amount of ENP. You'll have to read the question carefully. Any kind of questions can be asked from this example. All right. Let's take one more example. If you have a FMV of the building as 3 lakh, the basis of this building is 1 lakh, right? And also along with this building, you are assuming the mortgage of 1 lakh. So what you will do, you will just check where the fair market value is or mortgage amount, whichever is higher. So you will take 3 lakh as a FMV. Okay. So, and ENB is 4 lakh. ENB is 4 lakh. Now, I can say you have a distribution of 3 lakh. The company, corporate is giving you the whole building. So, I'll take the 3 lakh as a distribution. Out of this 3 lakh, what I'll do, corporate will recognize the gain. Remember the first scenario from these two tables? These two tables. We are looking at the example for this. Okay. So, up to the amount, see, let's see how much gain the corporation will recognize. Where it is. Yes. So 3 lakh is the FMV of the building minus adjusted basis of the building. Okay. What is my gain? It's 1 lakh. Okay. What will be the adjusted basis in the new property for shareholder? Shareholder is receiving it. So what the shareholder will do? Shareholder will take 3 lakh, whatever amount he is receiving, the FMV. Shareholder will reduce the mortgage which is assumed by the shareholder. So I'll reduce 3 lakh minus 1 lakh as a mortgage. Whatever is the remaining, this will be my basis, shareholder's basis in the property which they are receiving. Now, at what amount the shareholder will recognize dividend? As I said, the dividend income should be the FMV. Okay, it should be 3 lakh. But FMV or what is the basis of my property? Basis of property is just 2 lakh. So reportable dividend will be just 2 lakh and not 3 lakh. Got it, guys? Next is, there's a small summary on distribution and redemption from the point of view of corporation, from the point of view of the shareholder. Okay, let's see if the property is having adjusted basis and it's having a FMV. So difference between the adjusted basis and the FMV will be recognized as a capital gain by the corporation. So for FMV calculation, you will see that whether your FMV is higher of actual FMV or the liability assumed by the shareholder, whichever is higher, this amount you will consider over here and compare it with the property's adjusted basis. Got it? Now, difference you will recognize as a capital gain. But if the ENP is less, then current year ENP plus difference which you are recognized as a gain, here you are going to recognize this as a gain, right? So you will add that gain in current year ENP, right? Difference which will be recognized as gain plus accumulated ENP. If you have any from the previous years, you will get that amount, reduce the dividend, reduce the basis, whatever will be the remaining will be the capital gain for the shareholder. Got it, guys? So actually this is the same which has been shown over here. You will take the current year ENP, whatever the capital gain that the corporation is recognizing, you will take over here, and then what you will do, you will add the accumulated ENP. You'll get a total amount. Now out of that total amount, you will just reduce whatever is dividend you are going to pay, reduce the basis of the shareholder. That amount will be your capital gain for the shareholder. Okay. Next is liquidating distribution. This was about redemption of non-liquidating. Non-liquidating means, you know, still this shareholder is holding some share in the corporation. They are not having any changes in the ownership or not having any changes in the voting power. But if I talk about liquidating distribution, means they are liquidating their ownership share. Then what you will do, you will take the FMV of the property up to the ENP, right? Beginning ENP plus gain recognized plus current year ENP up to the whole amount which it's still there in the company, that will be considered as a dividend. Okay, then we will see over and above this also you are getting, then whatever is over and above up to your basis, it will be a non-taxable. So if you are getting more, then above that amount it will be a capital gain. Okay, so yeah, that's it for the corporation chapter. We'll just quickly complete the S Corp in the next session, and then we'll revise the whole corporation and partnership. See, if you can see, just after the S Corp chapter, I have put on the chart for corporation plus partnership. So your partnership chapter will be done, corporation will be done, and we'll revise it from tomorrow. So thank you guys. That's it for the day.